Thank you, everyone, for inviting me to be here with you today. It's a pleasure for me to talk to you. When people ask what I do, sometimes I say I fix Wall Street. And what I mean by that is I try to make it work more efficiently. I try to find the nexus between investor protection, which is regulation, and the ability for entrepreneurs to raise capital so that they can grow their businesses. And I'm a big fan of the Jobs Act, which I think did a lot to promote fundraising for emerging companies. The reason that alternative trading systems, or ATSs, are important is that when entrepreneurs are raising capital for their businesses, people want to have an exit strategy. They want to know that at some point they can get out. And the average time from founding to a liquidity event, an IPO or a sale of the company, is a minimum 8 to 10 years. So people are looking for ways to go to the next thing sooner than that. In addition, a lot of employees are attracted with stock, which may vest over a period of years. And at some point, these younger employees may have a need for cash. They want to buy a house or do whatever they want to do. And they need an avenue towards liquidity. So an entrepreneur can really enhance its ability to raise capital by offering or being willing to consider liquidity alternatives. But for entrepreneurs, the difficulty is they don't want to let the employees out too early, because this stock, that their ability to earn this stock and cash in on it, helps the issuer retain that employee. And issuers also want to control who their shareholders are. And if a shareholder says, well, I want to sell, usually the early stock is locked up with lots of restrictions. Some are imposed by law, and many are imposed by the issuer. We have a right of first refusal to buy your stock. You can't sell your stock for X number of years. We have to approve of it, whatever. And because the issuer doesn't want some fractious new shareholder showing up on the scene, taking away valuable time that they would like to be using to develop their company. So how does this first, I don't know if you've heard this before in other lectures, but I'm going to go through just a few seconds on how people raise capital. The earliest rounds are, well, we were talking about Kickstarter before. So Kickstarter and similar sites, one way. Friends and family seed rounds are another, where people are willing to take a chance on you. The next step is usually the venture capitalists or angel funds. And then after that comes a series of private fundraising rounds, usually conducted pursuant to something called Regulation D, which controls one way that private placements are exempt from having to register with the Securities and Exchange Commission. We also have a new way of raising capital called crowdfunding, which is Regulation CF under the Jobs Act. And currently you can raise $1,770,000 through a Reg CF offering, but a rule has been adopted, it's not yet effective, that pushes that up to $5 million. And finally, there's something called a Reg A raise, which runs from $20 to $70 million. And the nice thing about Reg A's is they cost more to do, but the stock is freely tradable after that. So you don't have any worries about this liquidity and needing exemptions from federal and state securities laws for a buyer and a seller to meet. I talked before about these transfer restrictions, and they're important to understand. One of the most important ones is a ROFR, a right of first refusal, where the issuer has a right to repurchase the securities sought to be resold. The owner shows up and says, well, I have an offer from so-and-so, and the company has a right to buy it. This is a way of them controlling who their investors are. And then sometimes they don't, but the stock it remains restricted because there are restrictions beyond these ROFRs. And then it's up to the company about whether they want to waive that restriction or not. And often, because of this desire to control who their shareholders are, they don't really want to waive it. But Silicon Valley and similar being what they are, they'll say, well, we'll buy it for, 30 cents on the dollar of what our last round went for. So the investor doesn't make out that well. And obtaining waivers of restrictions that are in place can be time consuming. So there are other ways for this stock to be traded, assuming that these restrictions have passed their time of effectiveness. And one way is called a listing service. We haven't gotten to ATSs yet. We're going to get there. And a listing service is described in no action letters. It's sort of like a bulletin board where people who want to buy and sell securities of a certain issuer post their interests and how to contact them. And the person who runs the bulletin board charges a flat fee. It usually has some interest. Sometimes, a lot of times, it's a quasi-governmental agency that runs this thing, or not for profit, and they're just trying to help businesses. And in these listing services, the parties have to make their own arrangements about moving the funds and securities. Sorry, that's my phone telling me I'm supposed to be talking to you, so I'm going to turn it off. Now we're at ATSs. So what is this alternative trading system anyway? It's an exchange. It's an exchange. And what's an exchange? An exchange is a place where multiple buyers and sellers come together, and that uses non-discretionary methods to match buyer and seller interest. And some exchanges are registered. That would be like the New York Stock Exchange or NASDAQ. And some aren't. And the ones that aren't are alternative trading systems. Because they're not registered doesn't mean they're not regulated at all. The SEC oversees them loosely. You have to submit a form before you can operate one. You have to be a broker-dealer in order to operate one. And then you have to submit quarterly and annually some different information about what's going on your ATS. The ATSs can trade registered securities just like a registered exchange does, or it can trade unregistered securities that were issued through private placements usually. And an ATS, unlike a listing service, can charge commissions, which is why people want to form them, even though it's challenging because you have to become a broker-dealer and you have to apply to the regulator, FINRA, for approval to operate this ATS, and you have to apply to the SEC. You can make money providing this secondary trading service that the issuers want to be able to offer their shareholders. So how does it work, the ATS? People submit buy and sell orders. They say what the security is. They say how much of it they want to buy or sell and at what price. And some ATSs do exact matches, and some ATSs have crossing sessions several times a day, and some do exact matches in those crossing sessions, and some do midpoint crosses or other kinds of crosses, generally though midpoint. The funds and securities are moved at the same time. It's called delivery versus payment and receipt versus payment. An ATS, to avoid chaos and misbehavior on the part of people who are subscribing to it, can regulate their behavior, but only their behavior on the ATS. So you can have people manipulating or putting in fake orders and then withdrawing them just to sort of test the waters, or to try to do a trade with somebody to find out if there's interest. ATSs have ways to control that sort of behavior, which in many cases would be illegal anyway. The orders that are outstanding, or at least the top of the book, the best bid and the best offer, are generally displayed. Blue sky, what is that? That's state regulation. So while, for instance, in reg crowdfunding, the initial offering, and in fact, under Reg D, the initial offerings are exempt from state regulation. State regulators are not allowed to interfere in these offerings. The secondary trading is subject to state regulation, and it imposes additional costs on whoever's going to pay. Sometimes it's the issuer, sometimes it's the ATS operator. But an ATS operator could be looking in the first year that the stock is listed under a common way that this is done, could be looking at a $10,000 cost just to be able to trade the stock free of state regulations. On the other hand, if you have like one transaction a year in some state, in many states, there are exemptions from any of their requirements. It's called a de minimis exemption. And then there's another way that securities get traded. There are firms, one of the most well-known of them is Forge, which set up special purpose vehicles and collect stock or derivatives of stock from people who have it. And then they sell interest in this special purpose vehicle, or this pooled investment vehicle. There are risks in doing that, but those risks have, I'm sorry about my dog. He's 18 and a half years old, and when he wants to go out, he'll tell us all about it. These companies generally operate in the area of unicorn issuers, meaning issuers with, these billion-dollar valuations that haven't made a nickel in profits yet, but everyone expects them to. And those are all the ways, aside from ATS, that securities can be traded on the secondary market. Of course, people are always free to just arrange a sale among themselves, but it's hard to locate a buyer when you're a willing seller. So these listing services and alternative trading systems and people like Forge or another competitor called Zambato are helpful to people who are now ready to go on to their next adventure. So that was a lot of material, and I again apologize for the dog barking. He's going to keep it up. And I invite you to ask me any questions you want. There's no question that is a silly question. This stuff is complicated. I've been a lawyer for 45 years, and I learn new things every single day.
Well, that's great. So I understand that you might need perhaps to start a broker-dealer if you can't find an existing one wishing to umbrella your ATS. But aren't there shell broker-dealers available so that you can kind of speed the process up by buying a broker-dealer that's perhaps non-producing at a relative discount?
There are shell brokers, but those of us who know, and FINRA will knows that they have to do the same investigation on who's going to take over the broker dealer and how they're going to run it and what their experience is, as if you um, were establishing a new broker dealer. So do you save time? No. Do you save money? No, actually it can be more money, because not only are you having to tell FINRA everything you had to tell them in the first place, but you now have to buy this broker dealer from somebody, and that's going to cost you 30 or 50 or $100,000. So you might as well go to some lawyer or some consulting firm who knows what they're doing and just start a new one. And then plus, you never really know what's lurking in the history of an already established broker dealer. So you're buying somebody else's problem, and you're not really, the risk reward ratio is not favorable. So I and my fellow practitioners generally counsel people not to do that. It's just not it's not the best road to go down. You don't really save anything.
Well,
Although having said that, there is one consulting firm that I know who has a bunch of broker dealers that have never done anything sitting on the shelf. And for $25,000 or $50,000, whatever they charge, you can do that. But honestly, if you wanted to form an ATS in that broker dealer, you're really not saving yourself any money, and you got to pay for it, pay for the broker dealer that's already existing. And you're not, the process in the end, because ATSs are complicated, is going to be just as long. So I'm back to the same place. It's like, really, people think it's a great idea, but I'm not one of those people.
Well, I heard a rumor that security attorneys were expensive. And I might be wrong about that. How much does it cost to start one of these ATSs if you have to start your own broker dealer and get a compliance officer and all these other things involving the hoops that you have to jump through? It sounds like millions.
Not millions, but it will definitely cost, it will definitely cost a couple of $100,000 by the time you're all in with both the broker dealer and the ATS. And you can expect that the process, it'll take you 2 months just to figure out with your lawyer or consulting firm, whichever you use, what the business plan looks like, and to write the business plan. That's really the hardest part of the whole thing, working out the business plan. And the business plan is complicated because you not only have to say what you want to do, but you have to say, how you're going to do it and with whom and who all your vendors are going to be. There's a lot of detail that goes into the business plan. It's just, you need a lot of help. You have to store your records in a certain way. You have to make a contract with somebody who does that. So you need good professional help to do this. And it's not that inexpensive. However, if you just want to offer out securities, be an issuer and not handle funds and securities, have somebody else do that, like do private placements. And then for secondary trading, there is another road, and I'm helping somebody do this right now. You can go to an existing alternative trading system that is willing to embrace customers of a broker dealer who does private placements for the purpose of putting secondary orders for secondary trades on their ATS. So then you don't really have to do anything with respect to the ATS. It really shortens up the process to becoming a broker dealer, because as you use this term, nickel broker dealer. A nickel broker dealer is a broker dealer that is only required to have 120% of $5,000 in capital to do its business, because it only does private placements. It doesn't handle funds and securities. Primarily, those are the reasons why they don't need much capital. Now, having said all of that, if you want to do tokens all bets are off. That's a whole other layer of complication. But if you're willing to stick to regular securities that haven't been put on the blockchain, which is almost impossible to do at this point in time in any case, so not really worth it, even though I specialize in it. And I have a way to do it. It's really complicated and costly and laborious. It's a good thing to do as a second step. But if you want to just be a broker dealer that helps people raise capital, and then you refer people on, there are ATSs that will make a deal with you where you share in a revenue stream from the secondary trading. And there's a very particular way that has to be structured, because non-broker dealers aren't allowed to get commissions, commission income. But if you structure it in a certain way, you can just have it be revenue stream of profits with, after all expenses, and so that's a solution. There are solutions if you're creative, like I like to be. Keep at it, and then I can call FINRA and say, this is just like the last one, such and such. Oh, okay, fine, and you can speed it up. And a nickel broker dealer that just does private placements, the FINRA has something called fast track, which means that you can be in and out with your application in 3 months. So if you want to keep it simple, you can be in and out in 3 months, and then you can just refer your secondary trading to an already existing ATS. So if you're looking for cheap and fast, that's a better way to go.
Very good. So how do you find these ATSs? Don't they all have to register with FINRA?
Yeah, but you have to find one that wants to actually do this and fits into your, you call me up and you say, Linda, help me do X. And I can help you do X. And I try to use consultants to do all the heavy lifting on the filing part of it, because nobody wants to pay me my rate to enter things into a computer, right? But there are people who are expert at that, and they cost a lot less. And so there are ways to do this efficiently.
Good.
Does anybody who's listening to all of this think that they actually understand what these alternative trading systems do? Do you have any questions you want to ask me about that, or why anybody wants to use them?
Well, yeah,
Hi,
Linda, why would
Linda.
anybody want to use them?
Hi, Linda.
Yeah.
Thank you so much for.
Wait, one at a time. Let me answer Bill.
Yeah, who would want to use an ATF?
You would if you own stock that you got in a private placement and the restriction period had run and you wanted to sell it and buy something else. Let's say you felt the company was 4 times more valuable than when you bought into it in the first place. You could tell that from the rounds of financing they've done and where they pegged the price, right? So you're ready to go out and go on to the next great thing. That would be a use of an ATS.
And how do we find an ATS?
Um,
Word of mouth?
there
I
are,
call you.
there are, well, the trick is not only finding an ATS, but finding one that really deals with private placement securities. So there are 40 some odd alternative trading systems that the SEC has on a list on its website. But most of those ATSs deal with registered securities or debt instruments, and there are only a few that really deal with these kinds of securities, and there are fewer still that deal with really low price securities. So you pick up the phone and you call me. I mean, you can look at the whole list, but I know who's doing what. So you kind of have to get a customized answer to that question. Anybody else curious about anything? All of this fundraising, and then what do you do with it after it's in your hands?
So when you said Forge, did you mean Wealth Forge, or is that a different thing?
I mean, a company that used to be called Equidate that now calls itself Forge, that specializes in secondary sales through special purpose vehicles of unicorns. I mean, that's the quickest way I can boil down for you what they do. I mean, you can go on the Forge website and read all about it.
Yeah, I think Wealth Forge was one of those nickel brokers, and I think
Maybe
they had FINRA problems.
As a
well,
former prosecutor, I'd recommend you not call your company Forge. Sorry, I don't like hearing Forge with respect to documents. It seems like bad luck. I'd advise against it.
it might be, but Forge, the one I'm talking about.
You're talking about forging metal, and I hear forging documents, and I don't like it.
But Forge is very well known in the field.
Okay.
I hate to tell you, Bill, but they're
Fair enough.
a real leader in this unicorn secondary trading with these special purpose vehicles that they set up.
Bill may be thinking of forging steel bars.
Bill used to be a prosecutor for the state of Delaware in financial crimes.
Now, what does the Zamboto? I don't know if I said it right.
Zamboto is similar to Forge, but is similar to Forge. They put together, they know the players in the field. People come to them looking for matches. Buyers come to them, sellers come to them, and they put them together for a fee. They have an ATS, but it doesn't operate like a traditional ATS. Most of their matches are manual, and for substantial amount of stock, really focusing on the Silicon Valley unicorn crew. But nice, I know them well, very well.
And when you start this broker dealer, do you have to register in every state where you might have a customer that you want to do a transaction with?
Well, not before you have that customer, but certainly in order to take on that customer, to onboard that customer as a customer, unless you're going to have one of these quote de minimis exemptions, like that's the only customer you're ever going to have in that state, and that state happens to have a de minimis exemption, which not all states do, you don't have to register. So generally when people start out and they're registered in the state where they're located, and maybe some popular states, like popular states are New York, Illinois, sometimes Florida, but you have to have behaved yourself for your whole life to get into Florida. California, the states where California is a difficult state in terms of state regulation of securities, but it's a popular state that people like because a lot of investors are there and because Silicon Valley is there, although people are moving out of Silicon Valley now because of California regulation.
So
Linda,
true.
could you switch over for a related product, possibly? Employee-owned stock in a private company, so-called ESOPs, apparently not regulated by the SEC, nor does FINRA get involved. Apparently, it's all Department of Commerce. But if an entrepreneur wants to liquefy his ownership and he's going to own 50% or less, I understand he could just put out a memo and sell to employees, or could leverage the thing by borrowing from a bank, and then the bank does sell the employees the stock. Are there alternative trading systems for ESOPs?
No, there are actual people who specialize in this area. People who as an important part of what they do every day is they help people ESOP their interest in their own companies. And there are several,
Which means what?
leaders in the field. It's a very specialized area because you're having to deal with bankers. Sometimes there are benefit plans involved, like it involves, sometimes it can involve in life insurance for the CEO, that could be the reason. Or it could just, there's a lot of tax advantages, but it needs to be done very, very carefully under the leadership of a very skilled lawyer who understands tax and ERISA matters and can give the proper guidance.
Hello.
Yes.
Hi, Linda. Thank you so much for sharing this. Most of the new company, the founder, when they founded this company, they have this called restrictions from the investors.
Yes.
Really, 5 years, before you can get invested. So you mentioned one of the most practical use is accelerate the liquidity. You said normally a company takes 10 years to get, from a startup to exit. Could you give us some case example to illustrate from a founder's point of view? So how he can take advantage of this ATS to speed up the liquidation.
So generally, and Zampato is a good example of this, the ATS will receive a sell order, or an indication from someone who's a founder or has a lot of the stock and wants to get out. And the ATS personnel will approach the issuer. Actually, for Silicon Valley, for most of the unicorns, there are 3 main law firms, and you just have to know all the issuers and which law firm represents them. And so the ATS will go to the law firm that's the one for this particular issue and say, look, I'm representing somebody who wants to sell, and request a waiver. And sometimes you get it. And the ATSs know which companies are likely to give waivers and which ones don't. But I remember there was one case, and I don't want to give any names, but there was one case where a company was doing an IPO. And because there had been so many examples or instances of employee stock options turning into derivative instruments, that this particular issuer had no idea who actually was going to get the money at the end of the day after the IPO. They had no idea who was going to be on their cap table. They had no idea that this was even going on. Now I think the SEC, after that particular thing happened, the SEC stepped in to explain to these ATSs or facilitators of these transactions that there really had to be a lot more transparency in what went on. But the companies who do this thing regularly understand how to go get the waivers. And even the companies who were not getting the waivers after this big sweep by the SEC, now they're getting the waivers. And Silicon Valley, the law firms and the issuers understand that if they never give waivers, they're going to have a real hard time raising money. So, the thing gets into balance eventually.
Right.
Eventually. It started off, it was really tough. Oh, we're not giving you a waiver. We're not giving you a waiver, not giving you a waiver. But there's pressure. If some big venture capital fund is telling you they want a waiver and you want them to invest in your next good thing, well, you're going to give them a waiver. Or you want them to invest 2 rounds later, right? Maybe they want to get out now, but they're willing to come in again at a later stage. So, nothing is ever set in stone with securities. It's all like pressuring and negotiating, and and people realizing that they have to have some flexibility. They can't just be that everything is going to be the way they initially envisioned it, because life isn't like that, right?
So Linda, just to clarify, when you say waiver, you mean the waiver for the right of first refusal, is that correct?
It or waiver of other restrictions. There are plenty of restrictions that accompany these securities, and they're not just rights of first refusal. There's all kinds of crazy restrictions. You can't, as the last person said, you can't sell this for 5 years, or you can't sell it ever until there's a liquidity event. I mean, they overlay lots of restrictions that have nothing to do with securities law. And, you know, people are so hot to get in on the unicorn trail that sometimes they accept it, but investors are getting smarter and savvier and understand the power that they wield. After all, they're the ones with the money, right?
Yes.
That's
So
right.
in the restriction part, once the company started, they get the funding and they have to call the restriction on the selling of the stock. But also post IPO, the founders has the this
Lockup,
but
a lockup
they have the
period.
lockup. Does this also deal with the lockup of the stocks?
The lockup is totally separate. So that's a negotiated thing with the underwriter, and the lockup is usually, could be 6 months. It could be, I mean, it depends. The CEO might be subject to a much longer lockup. You know,
Right.
it's a negotiation. All of this stuff is a negotiation. Are there kind of standards? Yes, but you know,
Can
it
sell that
depends.
stock
If you're the hottest thing since sliced bread, you're in a good negotiating position.
Can you sell that in ATS?
Can you sell it in an ATM? You can't. Listen, if your stock is locked, then the transfer agent knows it's locked. You're not selling it anywhere,
Okay, thank you.
because the transfer agent won't transfer it, because it's right there on the ledger that the stock is restricted. And until that restricted period is gone, that transfer agent isn't moving that stock at all, because this transfer agent will get sued.
Thank you very much, Linda. Thank you.
Linda, when you go to a transfer agent, do you need a QSIP for the security?
QSIP numbers. It depends at what point you're going to the transfer agent. If the stock is freely tradable, you need a QSIP number, because the broker dealer transferring the stock has to make a report to FINRA about the transfer, and you can't make that report without a QSIP number. So, but there's a, I know this sounds insane, but QSIP doesn't get it. And so FINRA has this special secret method of helping you get a QSIP number when your stock just comes out of the restriction period. I don't make this stuff up. It's just the way it works.
That's great.
It took me months to figure this one out. It's like, we don't tell anybody this. Really?
So it's a chicken and egg problem, it sounds like, and FINRA has a way around it somehow.
Well, yeah, you know, you have to be persistent, and you have to have experience, having good help when you're trying to do something. I know people, I was sitting in on a webinar this afternoon that I was not on the panel, I was just listening. And you know, it was a Zoom meeting, and the whole chat was dissing lawyers. You know, lawyers are the worst. They get the way, they do, blah, blah. And I'm thinking, but I didn't write in, you know, you all don't understand. The lawyers are helping you do stuff. And you may not like us because we're telling you what the real world is like and how it's functioning, and how what you think you are just about to do, you can't do. Maybe you don't want to hear that, but that's the law. And I'm helping you find a way through the law. And if you don't want to pay me for that, then hang on to your stock. I mean,
So after you've gotten your QSIP from FINRA and you want to go to your transfer agent, is that the Depository Transfer Corporation, the DTC?
well, no, not necessarily.
Okay.
DTCC is clearing and settlement for registered securities mostly. They're not DTCC. I talked to TTCC a lot. Their general counsel is an old buddy of mine, but they're really interested much more in registered securities, although they have a new project now to try to figure out how they're going to deal with private placements. But there are a lot of transfer agents with the ATSs, and this especially comes up when securities are tokenized. There are banks that will take care of the transfer of funds and coordinate with the transfer agent on the transfer of securities. And there's a pattern that you can set up, or a structure that you can set up to facilitate all of that. So there are plenty of stock transfer agents all over the place. Issuers can actually, you can have a paper ledger, and if an issuer wants to do it themselves. But I think issuers find this cumbersome, so that you can hire somebody to do it for you. And there are plenty of willing transfer agents around.
So you can be your own transfer agent.
An issuer can definitely, when you get your stock book, when you set your company up, usually you do it with the help of a company, right? And there's companies down in Delaware who just set it all up. So let's say you're a corporation, they'll send you a book, and they'll send you form, incorporation documents and all sorts of things in the back. And you have like maybe 20 stock certificates, or how many ever you ordered. And then there's a register. And in the register, you can write down, you can even do it in pen and ink, you can write down who got issued the stock, what was the number of that stock certificate, right? You can do that yourself. I, in fact, have done it. I did it as a beginning lawyer a gazillion years ago. And I did it as recently as a few years ago for a startup company. We just wrote it down on paper. But most people today at least keep it on a computer.
I would use a computer because no one can read my writing.
Well,
So if you start a broker dealer and you've started your ATS, and let's assume for the moment that I've got $250,000 burning a hole in my pocket so I can afford my lawyers and everything, I still need adult supervision, right? Some sort of a Series 7 person, and maybe a compliance officer, and maybe somebody to watch over all of that.
Well, worse. So, or from an investor protection point of view, better. So every brokerage firm, unless you're a one-person shop, has to have two securities principals who understand the securities business and have passed something called the Series 24, which allows you to supervise other people. People who are just engaged in sales have to have a Series 7. Every brokerage firm needs a chief compliance officer who takes responsibilities. I think the name of that position speaks for itself. Every broker dealer has a big, thick compliance procedures manual that it's supposed to follow. There's lots and lots and lots and lots and lots of rules that have to be followed by a broker dealer, and how each particular broker dealer is going to follow them is written up in this supervisory manual. Every broker dealer needs what we call a FinOp. You can rent one. You don't have to have one that's only yours. And most small companies, most small broker dealers rent one. There are firms that specialize in what we call rent a FinOp. And there are accountants who every month the broker dealer has to submit a form to FINRA, and it has to be, it's has to be filled out in a certain way, and they're skilled at that. And so sometimes there's a bookkeeper who keeps the books, and then the FinOp comes in and reviews the bookkeeper's work, or sometimes the FinOp is actually doing the work, and then can gin up this report, which is then submitted to FINRA. So, and then there's another exam. If you're going to help your issuers structure offerings as opposed to just sell them, then there's an exam called the 79, which doesn't allow you to sell securities, but it allows you to structure offerings. That's a tougher exam, actually. But people who do that and do that exclusively need to have that exam. So it's a complicated business. I'm sorry to be the bearer of these tidings, but you really, somebody who doesn't know what they're doing but just wants to do it really needs experienced help in the beginning so they don't mess it up. Because when a broker-dealer messes up, they get sanctioned, and then you get inspected a lot if you get sanctioned for bad stuff, and it's a drag. And sometimes individuals get sanctioned as well, and nobody likes that because your record follows you around. And like, for example, if let's say you're an insurance agent, your record of having been sanctioned by FINRA will follow around, and your insurance regulator will know about it, and makes life much less pleasant sometimes. Again, I'm sorry about the dog. Dog is
It's all
18
right.
and a half.
I've been dominating the questions. Are there any other questions? Well, I guess that might wrap it up for us, unless you guys have some other questions you might like to ask. The bottom line is it's very expensive if you're going to be hiring all this talent to supervise your brokerage firm. It sounds like renting an ATS is the way to go if it's possible.
And you can actually, if you're a quote nickel broker dealer and you just want to do the offering, you can rent a lot of the help. There are consulting firms who will provide the principals and the FinOp and the compliance officer to you.
That's a good
So if you want to know how to get those resources, you can call me up and I'll give you guidance.
Very cool. Very cool.
So you're
Yeah,
not just
basically,
stuck there. You're not
I'm
stuck
assuming
there
that-
on your own. I'm sorry.
I'm assuming that, a huge amount of the SEC, FINRA difficulties are avoided if a company is private, even though the interest in the company might be marketed via memo.
Sorry, you were breaking up a little
Because
bit.
it's then
Could you
for some-
start over?
Yeah, sure. Assuming you have a fairly large private company, somebody, be 100 or at least $200 million in sales, and percentages of the company are sold via a memo. Who would, and the memo could go out to anyone, not just a company employee. And I guess that would make the difference, that it's all of a sudden the public supervision and it comes under the SEC and the SEC regulate and the FINRA regs.
Well, an issuer actually could do an offering by itself if it had the list of potential investors, right? Usually when people go to what they call placement agents to help them market securities in the firm, they go because the placement agent has a list of people who are interested in buying shares of new companies. So, but if the issuer's principals think that they know enough people, then they can do a memo or not do a memo and go raise money by themselves. They can't pay the employees to, based on how much if the employees go out and market it, the issuer is not allowed to pay the employees for the marketing of interests in the company. That, yeah, is one thing that they have to be careful about. But you don't have to use a broker dealer. It's just that some issuers don't know where to raise the money. And so there are these private placement brokers who can be very helpful. A big company with $200 million in revenue may not need so much help. On the other hand, it may be looking for a fresh bunch of pension funds or venture capitalists to buy its stock. So it may turn to someone for help in placing the securities.
If a small retirement fund buys an interest in a private company, does that all of a sudden make the private company a public company and pursuant to all the requirements of filing and so forth?
No,
They bought 10 or 20% of a private company.
You need 2,000 shareholders to get to be a reporting company. There's another requirement, which I don't remember off the top of my head, but being a reporting company, you have to do a lot to get there.
Mhm.
But generally, and then it's also a retirement fund. There are ERISA rules, so I don't even want to go down that road. There are ERISA lawyers for that, and I try not to be an ERISA lawyer. I talk to ERISA lawyers that I know if I have ERISA questions.
So
I
are
think
there any other questions? You got a question, Bill? Another one?
Yeah, I'm just speculating. I'm thinking that for relatively unknown and relatively new venture capital firms, that an investor might be advised it's extremely risky regarding financial regulation of the entity that they are investing in. Is that entity fully compliant? And I think investors frequently don't know whether, in fact, the vehicle that they're using is fully compliant or compliant at all.
Are you talking about the placement agent, or are you talking about the issuer?
Well, I've been talking about the issuers and private investment funds who in turn have invested in startups. And if I were to put my money into one, I would be kind of blind as to, well, whether that investment firm is fully compliant with all the necessary things.
That is a whole other
How
issue.
can one check?
Well, it depends on the investment advisor and the level of funds that they have under management. So they may be registered with the SEC as investment advisors. And if they're not, they're surely registered with their states. And so you can check with the state regulator of investment advisors to find out if they have any disciplinary history. But in terms of their skill set and the safety or risk reward ratio that you're looking at, you got to do a lot of due diligence.
Mm-hmm.
And if they're not providing much information, then maybe you want to find somebody else who is.
Yes. Yeah. So investor caveat emptor, be careful to put where you're putting your money.
Exactly. And with whom you put it.
Yeah.
I now asked
So
broker dealers and even investment advisors who are registered with the federal government. You can look them up on something called Broker Check. All you have to do is Google Broker Check and you get right to it. And you can look at firms and you can look at individuals, and their record and history and how long they've been in the business will show up. And if they've gotten into you click on something called Detailed Report, and Detailed Report will spit out anything that's ever happened to them that you would want to know about. Where they're registered, how long they've been registered, how have they gotten into trouble, what kind of trouble. Nobody,
Well, I'm a dog lover, and it sounds like somebody's dog needs attention.
it's mine.
I knew that it was yours. Well,
Yeah.
I hope everybody will join me in thanking Linda for a great presentation. Linda, thanks very much. Thank you.
My pleasure. Was my pleasure. If anybody wants to reach me, it's Linda Lerner, and the name of my firm is Halloran, Farkas and Kittela. You can look it up, or you, Doug, have my contact information.
And I've got your contact information, and I'll run this video by you before we decide whether or not to post it, okay?
Yeah, can we get rid of the dog bark?
I'm a signal processing guy. Anything is possible. We'll see.
Great.
All right.
Thanks a lot.
Thanks again. Bye-bye,
Thank you.
everybody.
Bye.
Thank you. Bye.